Welcome to Forex Films. Today is Tuesday, June the 21st, 2011, and we're taking a look at a 1-hour chart of the Euro-US dollar. We had this nice 5-wave rise up, and we started meeting a lot of resistance around 1.44. Broke through it, came up to about 144.30. And we've come back down really hard after Greece passed the confidence vote in the new parliament. And that was just a jumbling up of cabinet members for the prime minister in order to get more favorable people into financial spots, such as the defense minister became the financial minister, in order to pass harsh austerity measures. And the reaction isn't really what you would expect from this news, because it's really more bullish for the euro, because it means Greece will continue getting bailed out more likely. But technically, we were way overbought, and our 5-wave pattern was at an end, so we've got to retrace. We also had this wedge pattern forming, as you can see, and we broke out to the upside actually 3 times, but they were all 3 fakes, which when you're trading Elliott wave, you would really see that coming, as I did earlier in the day if you were reading my Forex commentary on forexfilms.com. Now, we passed through this right after the news, came back up off of this resistance or support line quite a few times, but we're finally breaking down now. So we got our test and retest. So I hope you got in short on this. If you've been watching my Twitter feed, you'll know that I was short from 44.15. I've actually added twice so far. Right after the Greek news, when we spiked higher and then came back lower anyway, I added to my position there, and then I added on the retest to these levels. Because we have quite a ways to go down in this direction. This is all short editions, by the way. Because this looks like a 5-wave pattern, and somewhat really like a B-wave pattern. Really, we count the whole thing as 1. So our first major Fibonacci level is the 38.2% retracement around 1.4290. We also have good support from this area, and way back here, a support area from the previous downtrend. But we may go back up following that point, but it's more likely that we will continue downward after that and come more to, because this is a second wave, come more down to an area such as 50%, which is 42.50, which has more support from longer time frames back. We get 42.30, and more likely just past the 61.8% retracement, about 1.4190. Those are all very good levels to watch, and I would add more to shorts here in anticipation of the moves down. And I would keep trading short until we've formed a good base. You don't want to reverse your positions too early, especially since if this starts accelerating really hard, we might break to a new low, but I think the probability of that is really low. Tomorrow morning we have Eurozone industrial production and Eurozone consumer confidence, which could move this pair, but it's not likely to have that great of effect because we have the Federal Open Market Committee meeting press conference. I believe that begins at 12:30, and then Bernanke is speaking at 2:30 in the afternoon. That's Eastern Daylight Time, of course. So this is a very interesting pair to trade. I think it's got a lot farther to fall, and then hopefully we'll be going long again and searching of 1.54 to 1.55. So let's move on. Australian dollar. This has been a bit more complicated. We've been having trouble getting past the 1.06 level. Come up. See, there's been 3 major times where we came up here and we just have not been able to pass it. And really this looks like a base forming pattern, and I haven't really been trading this anymore. Mostly euros, and I've got a few Canadian dollars, but I got out of that trade at the lows today. So maybe 105.50 would be a good retracement. Let's throw up a Fibonacci. Yeah, it looks like that would be a 61.8% retracement. So that'd be a good place to buy in again at. But with the euro being more bullish and having a larger in magnitude price objective, I think it's definitely wiser to trade more in euros. Now we have dollar Swiss. If you're watching my website earlier, I talked about this breakout trade. Looked like a 4th wave triangle, so we would be breaking lower sharply and then reversing, which definitely appears to be happening right now. We should get good continuation on this, and much the same way as the euro, we should expect a deep correction. Just judging by this move, it's probably a leading diagonal, and we're talking like 85 again, 0.85. New Zealand dollar. I also want to be short this. This looks like it could be very sharply, incredibly bearish. And this was very bullish, but this candle pattern again. I don't think we'll go to new lows, but fibbing this out, 80.40, 80.30, probably somewhere in there, maybe 80.50. Not as many pips as on the euro, but this will probably be hard and fast, so might want a little exposure to New Zealand dollar short. And the dollar CAD. I actually got out of this a little bit earlier, 97.20, which wasn't too early pip-wise, but this is more confusing again, as a lot of times the dollar CAD is. You kind of have to trade it separately pattern-wise, but definitely watch where other dollar pairs are going, and you'll know really where this is going to. So we're probably going to retrace pretty far on this, and then it's going to be time to short again. This looks like it's probably a leading diagonal itself, and then we have a third wave, but that doesn't really fit into what other dollar pairs are doing, so trade that with a grain of salt. The main thing is just watch where other dollar pairs bottom out at and trade this similar. Let's see. We have dollar yen, and this came back down pretty hard, and this has been a while in the making, between 80.30 really and 80. And we've been in there for a long time. Maybe we'll go back up to 80.50 before resuming the downtrend. That's really what's going on. This looks like an impulse down, then A, B, and we'll have C. 80.46. Really, I don't even care about this pair. It's not making me money, so I'm just staying out of it. And then the pound dollar, which didn't really go up that high, and it's not really retracing that much. We should get a pretty deep correction on this too. I just think lately it's always been better to trade euros to get a bigger range with the euro dollar. But you might try checking out euro pounds. In any case, looks like we're going to accelerate in dollar bullish way. So get out of any dollar short you have, definitely. And I would definitely be buying dollars right now. I think probably maybe we're going to sell off quickly enough that the FOMC can turn us bullish again, but I kind of doubt that. We'll see where we're at in the morning. Look at my Forex morning market commentary to find out where I think we're going in the morning. Thanks for watching. Good luck trading, and go buy some US dollars. Thanks.